Hello, welcome back. I'm joined with Greg Smith, the CEO of Equinox Gold, and we're here at Beaver Creek in Colorado. Greg, good to see you.
Good to see you.
Just we've done a video fairly recently, so I wanted this to be a bit more of an update, but just remind people who potentially haven't seen that, haven't been following the company, what is Equinox and sort of what's the strategy at the moment?
Yeah, sure. Equinox Gold, we're a mid-tier gold producer, diversified across the United States, Mexico, and Brazil. A lot of growth in our profile and our portfolio, and we're looking to build the premier America's gold producer.
Awesome. And can you just remind us of the sort of capital structure and corporate profile of the company as it stands?
Yeah, we're at about a $1.5 billion market cap Canadian. Strong balance sheet. Production this year will be around 580,000 ounces. And then we've got a number of projects that'll increase production over the coming years as we bring on those development projects online.
Okay. So obviously you've quite recently just become the CEO. I'm wondering if the philosophy and I guess the strategy behind the company has changed in any way in your view. And I guess looking a bit more forward, obviously you've got this pathway to 1 million ounces, but really has anything changed or are you sort of business as usual?
Well, yeah, so I've been CEO for about 2 weeks, but I've been president since we formed the company back in late 2017, early 2018. So I've been right there with Ross Beaty and Christian Millau, the previous CEO, all the way through. And I want to continue what we've started. And our vision hasn't changed. We want to get to a place of scale. We use a million ounces a year as an indicator of scale, but trying to grow the company. And we've got the assets to do it. And right now we got to focus on executing on those growth projects. So that hasn't changed. I think you'll investors in Equinox, my style might be a bit different than Christian, but our goals are the same. We want to build a champion gold company in the Americas.
Brilliant. Okay, and obviously we have to touch on it because obviously it's very recent news, but obviously you had legal blockade over at Los Filos. Can you just give us obviously you announced it on the 8th and then it resolved on the 12th. What happened there, and can you just give us a bit more background on that?
Yeah, I mean, Los Filos has a number of different community stakeholders in the region. There's been a history of these types of blockades predating us. It's unfortunate because it's very disruptive to the mine operations, and it doesn't affect just us, it affects our employees, it affects the contractors in the area. I think the best way to characterize it is all the stakeholders want to see the mine operating. They want, Los Filos to be a long life mine, and they want to benefit from it as much as they can, whether that's through jobs, through contracts, through, social collaboration projects, that type of thing. And when you have multiple communities, plus the company, plus other stakeholders, it's a challenge sometimes to balance all of that and keep your cost structure reasonable and be able to continue to invest in the project. So, yeah, it's unfortunate. I think this one was short. We had a very constructive meeting with the community shortly after it started, and we're happy they took it down. We'll continue that dialogue over time, and our goal is to get to a place where we've got good, robust dialogue. We can avoid these types of situations, and all the communities and us are on the same page to continue growing that project. In the next few months, we're going to put out a technical report on an expansion plan there at Los Filos, which would increase the production significantly. But we need to have an environment where we feel comfortable with long-term, stable operations, right, before you'd make that kind of investment.
That's the thing with Los Filos, it is quite a strategic asset for you. I think your estimated production in 2022 is 155 to 170,000 ounces. What are the main concerns that investors? Obviously, we're at an investment conference. What are the main concerns investors have been speaking to you about this week? And I guess how have you been addressing them over the?
Well, I mean, Los Filos is a concern because of the recent news release. But they also see the potential there, right? If you can expand that mine to produce 300,000 ounces plus of gold. So, as we talk a bit about that, more of the focus in this conference has been around our Greenstone development project in Ontario, and that's really where the focus has been. And I've been, very happy to talk about that.
Yeah, no. Well, let's move on to that because obviously that's an absolute humongous mine that you're, I believe, currently in construction.
Yep, in construction, about almost a year in construction.
And I saw the release, I think it was a couple of months ago, that you're on budget, on time. Just run us through at the moment in terms of actually, because we're in this inflationary environment at the moment, and to be on budget and on time is quite a success. I mean, do you foresee that continuing as it continues the construction process?
Yeah, we were just there last week with with some shareholders, analysts. Our whole team was there, or the Greenstone team was there. Our joint venture partners, Orion Mine Finance, they hold 40% of the project. They were there. And we're continuing to track on time, on budget for first gold pour in the first half of 2024. And I think, the reason, going back right to when we commenced construction, the reason we've been able to do this is because at the time we announced construction, we had already completed, or the Greenstone team had completed 85% of the detailed engineering, substantial amount of geotech drilling in the area of the tailings facility, the process plant area. We had a third party verify and validate our quantities, our schedule, our budget. And we did increase the budget to account for inflation from the feasibility study. We significantly increased the contingency amount, increased the overall budget amount, amended the schedule, and launched on that basis. We did a full review this summer at 100% completion of engineering, and we announced the results of that in a press release. And then this site tour last week really highlighted to people not just the scale and sort of the progress at the site, but that we've got a good team there, and things are going very well at the project.
So with your current production profile at the moment, then you've got Greenstone coming online in 2024. You've got Santa Luz. Maybe you could touch on Santa Luz as well.
Yeah, Santa Luz. Yeah, so we have 6 operating mines today. Santa Luz will be our 7th. It's in Brazil. We poured first gold there in March, and we've been in commissioning ever since. It's taken a little longer than we would have liked, but I think by the end of this month we'll be able to declare commercial production. Santa Luz this year will do 40 to 50,000 ounces, but next year and beyond, it's a 100,000 ounce producer. So it'll be a good mine for our portfolio.
Yeah. And how does this company look, say by the end of 2024? How many ounces could you be producing if everything goes on track? And what? I guess just give us a bit of an idea of what this company turns into.
Yeah, I mean, I'll extend a bit beyond 2024. I guess that's a little short term, but when I sit back and look at where Equinox is going, we're going to have, Greenstone as the largest mine, flagship project, 400,000 ounces of production. We own 60%. I'd love to own 100% of it in the future. Our Castle Mountain mine in California, right on the Nevada border, we're in the process of permitting an expansion there to 200,000 ounces of gold per year, another long life, large scale mine. Our business in Brazil, I think, will continue to produce over 300,000 ounces a year from our portfolio of mines there. And then we have Los Filos in Mexico, which is kind of 200 or so today, could be up to 300 in the future. So when you look at those mines all in production, you've got sort of 400,000 out of Ontario, you've got another 200,000 at least out of California. Our Mesquite mine is also there, and then you've got 300 potentially out of Mexico and 300 out of Brazil. It's a great production platform. You're at your 1 million ounces, and that's a goal we've been working to achieve. And and that's that in terms of production profile. Growth today is significant, but you get to a really nice, meaningful scale over the next sort of 3 to 4 years as those all come online.
And what's obviously a lot of the focus has to be on sort of getting these mines into production and expansion, right? But what's the scope for additional M&A or acquisitions in this space? Are you still looking at new opportunities, or is it really head down?
It's tough right now because we're in construction. Like everyone, our equity's been hit, but we're trading at quite a low multiple compared to our peers. Yeah. When your equity is trading at a lower multiple, it's hard to use equity to buy things and make it accretive. We're generating cash, but we're deploying our cash on the balance sheet and from our operations into the construction of Greenstone and our other expansion projects. So it's hard for me to allocate capital to acquisitions. I think it's a buyer's market. I would love to be buying things today. Equinox is not really in a position to do that. That's not to say we wouldn't in the future, right? We've got good growth ahead of us. As we advance on those, you start looking to where the next stage of growth will come from. And we have identified no assets, but in the future, there's things that we might want to bring on 7 to 10 years from now, and maybe we can develop those internally. Things like that would be of interest. So nothing right now, but we've grown this company through M&A and development. I would say we'll continue to grow this company through M&A and development, but we're in a period right now where development is the primary focus.
No, I agree. I think you did heads down. You've got a lot on your plate.
We have a lot on our plate.
Yeah. I just wanted to look at the cost profile of all the mines in general, all-in sustaining costs. I mean, at the moment, how does that stand? And from my understanding, when we were talking to Peter back in June, it sounded as though that as these new mines come into production, actually the cost profile comes down and profitability increases quite significantly too, right?
Yeah, I mean today, I think our all-in sustaining cost right now is around $1,500 an ounce, let's say, and part of that is capital costs that will benefit future operations. And a good example is at Castle Mountain. It's a small operation right now. We built, massively expanded the leach pad. That's going to take years and years of ore, but all those costs are hitting our all-in sustaining costs today, as sustaining costs, right? At Los Filos, same thing. We're developing the Burma Hall Underground. We're developing the Guadalupe open pit. A lot of the costs associated with that development are hitting our all-in sustaining costs today, but they're going to benefit the mine for years in the future. Of course, as you work through Santa Luz and you bring Greenstone on, you got new mines. New mines initially are lower costs as they have all new equipment, and you're high up in the pit. And so our cost profile will come down. You look at just G&A across more ounces, you look at efficiencies between operations, and as you cease that capital expansion, naturally your costs will come down. So we are, right now we're kind of an operator, but we're a development heavy operator, and we've got a lot of these expansion projects. We're looking at going underground at Aurizona. We're doing a lot of near mine exploration at Fazenda, at Mesquite. Obviously, we're building Castle. We're developing in Los Filos. So a lot of activity, and it does reflect in your AISC.
No, of course. And I guess just to finish up on, I know we've gone over a lot of this already, but just a bit more clarity on what does the next 12 months look like, and what drivers and milestones could be coming up that would be adding additional value to the company? I
mean, when I look at the next 12 months, Santa Luz coming online and into commercial operations, that'll be big for us. We're going to issue over the coming months a feasibility study on an expansion at Los Filos. That's been a long time coming. We've been working on that for quite some time. That'll come out in the market. Advancing Greenstone and keeping that on time and on budget is a huge focus for us. The Greenstone team, our partners at Orion, I mean, we're all focused on ensuring that happens. And 12 months from now, you're going to be in a position where you're weeks away probably from hot commissioning. Your full-scale mining's happening. Like, you're ramping up into that full commissioning period over the winter of 2024 toward production. So, I mean, next 12 months it's going to be busy between now and then, but at that 12 months, it's going to be a pretty exciting time for the company.
Awesome. Greg, thank you for your time.
Yeah, appreciate it. Thanks for having me.